You're watching Business Incorporated live from Channels HQ. Coming up, our producer Ken Jan has unveiled 4 electric vehicles in Nairobi as the company seeks to transition its fleet to battery-powered motor vehicles to cut emissions. And the Motor Traffic and Transport Department in Ghana has been tasked to ensure foreign motorists in the country possess valid ECOWAS brown card insurance schemes. And Egypt is set to receive a €150 million grant in early 2023 to help it overcome the current global food crisis. Hello and welcome to the program. I'm Ladi Williams. First off, let's kick off with the markets. Let's see how your money is performing at intraday. Starting with Africa, there we see sentiment in Africa all positive, with the NGX there 46,317 points, back at the 46K level, up 0.18%, continuing that bullish run we saw yesterday. South Africa, 73,000, getting to that 73,000 level now, up 0.56%. In North Africa, there we see it, EGX there, 12,676 points, up over 0.5%. And we see Kenya also closing yesterday in the green, up 0.19%. Let's flip over to the Middle East now. It's mostly negative sentiment at the trade. We're still seeing that continuous negative sentiment in the Middle East. You're seeing the UAE, Abu Dhabi, that's the only one in the green there, holding up 0.06%. Dubai, 3,325 points, down marginally by 0.03%. Move over to other parts we track in the Middle East. Qatar, Saudi Arabia, also in the red, down 0.25 and 0.41% respectively. Let's move over to Europe now, where European Union energy ministers in Brussels today are looking to tackle the contentious issue of the wholesale price cap on gas. The cap would automatically take effect on the month ahead. Price of gas, if it hits the limit for 2 weeks. Let's talk to Janelle Dumoulin now. Janelle, great to have you. What is expected today?
Today's talks are actually a continuation of discussions from Wednesday that basically achieved some things and got stuck on other points. Let's back up a bit. For the EU, energy price caps are measures for the EU to try and limit Russian revenue from hydrocarbons, which of course is the main way that Russia is financing its war into Ukraine. The idea is that European and British dealers can only trade Russian energy if they agree to not sell above a certain level. But of course, the challenge is that price caps have to be low enough to actually hurt Russian oil revenue, but high enough so that Russia is actually still incentivized to keep producing oil. But finding numbers for national governments across the EU to agree on is proving especially difficult. We also have to note that we are talking about a gas price cap and an oil price cap, and those are separate issues running into their own respective challenges.
And it's all about cap all over now with energy prices. What are the issues on the table?
So if we were to start with the oil price cap, the European Commission has been proposing a $65 to $70 a barrel price cap, and that's run into a mixed reception. Poland and the Baltic countries think that is too low. They were imagining a number closer to $30 a barrel. But you also have major shipping countries in the EU like Greece who would not be willing to slip below the $70 mark. The thing is, that's pretty much the level at which Russian crude is trading anyway. So one would have to ask what impact this would have. In terms of the gas price cap, that's actually a mechanism that would only be activated if the price per megawatt hour exceeds 275 euros for a fortnight in a row, and the difference with the world price of liquefied natural gas is equal to or greater than 58 euros. If that sounds complicated, that's because it is. The point of this is that it's sort of less to actively intervene in the energy market than to provide some protection for consumers. But it has also run into some criticism for not being much more than a gesture to keep EU countries discussing this. Some say that because those conditions are so specific, it's almost like it is designed not to kick in. However, discussions today amid these divisions continue for both these proposals, and everyone will have their eyes on Brussels to see what comes out of it.
All eyes there. Is this moving markets today?
Well, there was a fall in oil prices earlier on Wednesday after the proposed price range came out. But today, European markets are flat in early trading. Investors have their mind mostly on the Fed minutes that were released last night that seem to indicate that the central bank is, in fact, actually seeing some gains in its battle against inflation. They're also still looking at manufacturing data from the Eurozone yesterday that indicated a slight slowdown in business activity in the currency bloc. And that is what is moving markets today in Europe.
All right. Thank you so much. That was Janelle Dumoulin right there from Berlin with all the details on price caps and gas caps. Thank you so much. All right. Now let's move on to the UK. We see right now investors globally are watching central bankers for clues to next rate hike sizes. Let's see what's happening in the UK now. We have Juliana with the details. Great to have you, Juliana. So a senior Bank of England policymaker suggested that he could consider voting to cut UK interest rates. Are we getting dovish tales in the UK now?
Good afternoon, Laddie. Perhaps, although Dave Ramsden, the Bank of England Deputy Governor, he's in charge of markets and controls. He has typically been a hawkish member of the Bank of England, so I'm not sure we're going to see any cuts from him just yet. But he's been speaking at the Bank of England's Watchers Conference, and of course they've been looking at the state of the British economy. We know inflation is currently at 11.1%, well above the benchmark that the Bank of England have put in place at 2%, and interest rates are very, very high, currently at 3%. And according to some economists, it may have to reach about 5% in the middle of next year for inflation to come back down. And I think that's really where Ramsden was focusing on, basically saying that that's just way too high, because we know that the cost of borrowing comes with a cost. And the cost is, if you are a business that isn't that healthy, that does have a lot of debt, and you usually, take out a loan to pay for your debt, then it could push you on the brink of collapse. And we know that already about 1 in 4 mortgage owners are potentially going to lose their homes because they just cannot afford to pay for the increase. Some increases have gone up about £500 per household, which is a lot of money. So really, I don't think we're going to be expecting the Bank of England to stop raising interest rates just yet. But I think they've sounded the alarm that, look, we can't go too far, too fast, because, of course, it does have a knock-on effect, as we've seen recently.
All right, and I'm sure investors are watching closely. But let's talk football. Now, we know that sale of Manchester United, that's trending right now. But who do you think has the money to buy Man U? And I'm sure I'm a Man U fan.
Laddie, we're both Manchester United fans, but I've got to tell you, I am far from a accomplished football pundit. So allow me to just offer some opinion. Look, I think, it's a big topic at the moment, not just because, Portuguese striker Cristiano Ronaldo famously left the club with immediate effect on Tuesday night. The Glazer family has said, they're willing to sell the club. And I think, that's been met with glee by fans, because since the controversial purchase for £750 million, I think it was, back in 2005. They've not really been happy with the family. And I think the Glazers were really the first time we started seeing that grassroots sports in England was to be handled by the mega rich. We're not sure yet who would likely take up the offer. Manchester United haven't exactly been doing too well. I think you'll agree with me, right, Laddie, over the past few years. However, It is a very, very lucrative club, and they've had a very successful past. I think lots of observers will look to what happened earlier this year, where Roman Abramovich was forced to sell up Chelsea and Stamford Bridge because of his ties to the Kremlin. I think Chelsea managed to reach about £3.5 billion. So whatever happens, the Glazer family, who own about 2/3 of the club, will, come off very well in this. But because there's so much controversy surrounding Qatar and football corruption and football money laundering, I think this is going to have to be far more transparent. But whoever can get us to the top of the table, I'll be happy with that, Laddie.
Yeah, I'll be happy too. Even though it breaks my heart to see what's happening, with Ronaldo and the club.
Yes.
Yeah. But how are the markets reacting to all of this?
Market's pretty good. Of course, it's Thanksgiving, so happy Thanksgiving to our viewers in America and our viewers in Nigeria who are American. I hope you're having a great day. Bit subdued because, of course, the US markets are closed, but the FTSE All-Share is doing pretty good at intraday. It's up by 0.27%. FTSE 100, that's up by 0.22%. And the FTSE 250, the domestic market, that's up by more than 0.5%. In the currencies market, the British pound is currently trading up against the US dollar by 0.10%, also up against the euro by 0.44%, but down against the Japanese yen at intraday by 0.5%, Laddie.
All right, Juliana, are we expecting any big economic news tomorrow or for the rest of the week?
Well, for the rest of the week, we are likely to expect some big economic news. I suppose the main topic of discussion in the UK at the moment are the strikes. We know that there is an ongoing discussion between the Transport Ministry as well as RMT bosses. They are not budging. They want more money. We are going to be getting more strikes by university and staff, teachers from schools. Again, this is all about the cost of living. And today we are having strikes by Royal Mail. So anybody that's doing either Black Friday or Cyber Monday online purchases, you may see that there is a delay. We are bang in the middle of the winter of discontent. It's very, very cold in the UK at the moment, but that is not stopping people from downing tools and going onto the picket line, Laddie.
Right. Thank you so much, Juliana. Juliana there with all the details from the UK. Thank you. All right, now let's move into other markets. Now, see markets Asia Pacific traded higher. The U.S. Federal Reserve said they expect to switch to smaller rate hikes soon. According to minutes released, that was yesterday, stocks in Malaysia rose as the State Palace announced Anwar Ibrahim as the nation's prime minister. Then we see the Nikkei there, 28,383 points, up 0.95%. Shanghai, the only one, the red, down 0.25%. And HSI there, 17,660 points, up 0.78%. And the Kospi there, nearing that 1% mark at 0.96, ASX 200 up 0.14%. In mainland China, we see stocks also looking good. Hong Kong's Hang Seng, they're looking quite good at intraday today. That's looking at Asia, not looking bad at all. Let's move on to other markets. Now, see oil prices fell today, extending losses from previous session as fears of supply disruption eased. On the news that the group of 7 nations were considering a higher price cap on Russian oil. A greater than expected build-up in U.S. gasoline inventories added to the downward pressure. Brent crude futures had actually slid about 43 cents to $84.98 a barrel, while U.S. WTI futures dropped 35 cents to $77.59 a barrel, losing that $80 mark. Both benchmark contracts plunged more than 3% on news that planned price cap could be above the current market level. G7 is looking at a cap on Russian seaborne oil in the range of $65 to $70 per barrel, according to a European official, though European Union governments have not yet agreed with each other on the matter. And to the metals market now, see gold prices bounce above the key $1,750 a pound level today, consolidating gains after minutes of the U.S. Federal Reserve's latest minute. We know investors watching that minute and looking for clues there. Spot gold rose 0.4% to $1,755 per ounce. The U.S. gold futures advanced 0.6% to $1,755 per ounce. Lower rates tend to lift the appeal for the bullion in comparison with other interest-bearing assets. High interest rates have kept a leash on gold's traditional status as a hedge against high inflation and other uncertainties. This year, as they translate into high opportunity costs to hold the non-yielding asset. Minutes of the Fed's November 1st to 2nd meeting showed that a substantial majority of Fed policymakers agreed it would likely soon be appropriate to slow the pace of interest rate hikes. Fed fund futures are now pricing in an 85% chance of a 50 basis point increase in the December meeting after 4 straight 75 basis points hikes. And we'll all be looking out for that meeting. Well, we'll take a break now. When we come back, commodities market update is next. Just stay with us. All right, now for commodities market update, the price of a 5-liter vegetable oil spiked by 80%, about 9,000 year on year, more than the current food inflation rate of 23.72%. These oils, which are extracted from sunflower, corn, canola, palm, and soybeans, are in high demand during the Christmas season. Let's talk to Victoria Momona, analyst with Financial Derivatives Company, to give us more details. Now, great to have you on the program.
Thank you for having me, Ladi.
Yeah, so we've seen a lot of volatility with edible oil prices, and I'm sure the war in Ukraine also has a position in all of this.
Yes, you're right. We import most of the raw materials that we use in producing vegetable oil here in Nigeria. And as you're aware, between the last 1 year, we've had the issue of the war in Ukraine, which has caused raw material prices to spike in the last 1 year, and also caused shortage in the commodities market. So that's raw material. Those raw materials needed are imported from countries which are also facing challenges of high prices. In addition to that, vegetable oil, the demand for vegetable oil is a composite demand, and it is not just demanded for immediate consumption. It is also demanded for industrial uses like production of cosmetic soaps, among others. And this has driven the demand for vegetable oil amid tight supply in Nigeria. And the domestic production of vegetable oil in Nigeria is not sufficient enough to meet the demand for vegetable oil. And this has caused a shortfall of vegetable oil in Nigeria, which is being met through importation that is estimated at 300,000 metric tons annually. Meanwhile, manufacturers still import like a significant volume of food palm oil, which is used in producing vegetable oil. And we are aware that manufacturers are currently facing foreign exchange scarcity in addition to other domestic challenges. So all of these are being filtered into the domestic price of vegetable oil. That's why we see that the price of vegetable oil has risen.
And do you think this trend is likely to continue, this rise in prices?
Yeah.
All right, so we know, a couple of Nigerians, because of health reasons, try to stay away from, consuming fried foods and oils and all of that. Do you think that's impacting on a demand?
Vegetable oil is used for many types of cooking, including baking, frying, and grilling, right? And it's an inevitable ingredient used in the preparation of daily meal in households, right? So, however, consumers have become increasingly conscious about their health and are now looking out for the kind of vegetable oils that are being consumed. So yes, the type of vegetable oil actually will impact consumer choices, because most of them are now making, gathering information regarding some brands of vegetable oil, and that has formed their basis for their preferences. Some consumers have explored options like avocado oil, extra olive virgin oil, which are proven to have healthier benefits. Additionally, air fryers have become, increasingly used in households as a part of the kitchen appliance, because it requires little oil to fry the food compared to the traditional deep frying of food. So you don't necessarily need to submerge the food in oil. All you need to do is just fix it in the appliance, and then your food is ready to eat. It has the same taste and the same flavor, right? And in that regard, also, it also has like extra benefits in terms of the calories and fats that are being produced when using the air fryer. So although the air fryer actually takes a longer while to fry the food, but I mean, it's worth the while since we are considering our health. Right.
Well, air fryer is getting quite popular at this time. But, still talking about price. Now, we know the Lagos state government, they're looking for ways to, bring down the prices and make it cheaper for, households to be able to afford, most of these oils. And we've seen them slash some of these prices, talking about vegetable oil. They've slashed the 3 liter to about, subsidized about 5,000. Also for rice, they see they brought it down to about 37,000. So I'm wondering what happens to those, traders that have stocked up at higher prices. That would impact them negatively, I believe.
You're right. I mean, the initiative by the Lagos State government is actually a good one for consumers, considering, especially at this time, where the major commodities that they subsidize is usually in high demand. It would make it affordable and accessible for consumers. On the other hand, it's no news that businesses actually stock up commodity, especially the ones that are in high demand ahead of Christmas, like rice and oil. And some of these businesses also hoard these commodities in order to, sell it at higher prices at the peak of the festive period. This initiative that is being introduced by the Lagos State government would actually have an impact on the prices as well as the profits of businesses. And this is because the Christmas season is just around the corner, and these businesses would be forced to cut down the prices as well as release those commodities that they've been hoarding in order to prevent having excess inventory at the end of the festive period. So we would see that the lower prices that would actually cause businesses and profit to go down, while consumers would begin to enjoy at least low prices. Consumers in Lagos begin to enjoy low prices. Okay,
well, I guess consumers and sellers all need support at this time. Thank you so much. That was Victoria Momo, analyst, Financial Derivatives Company. Thank you. All right, now let's move on to other stories. See, power producer KenGen has unveiled 4 electric vehicles in Nairobi as the company seeks to transition its fleets to battery-powered motor vehicles to cut emissions. The 4 vehicles, which include 2 SUVs and 2 double-cabin pickups, will primarily be used for data collection and policy development. The NSE-listed company said the rollout is part of its environmental sustainability plan to reduce global greenhouse gas emissions by inspiring confidence for wider EV adoption across the country. And Ghana's National Bureau of the ECOWAS Brown Card Insurance Scheme has directed the Motor Traffic and Transport Department of the Police Service to ensure foreign motorists in the country possess valid brown card certificates. According to the Bureau, it is imperative for foreign motorists to possess the card as it enables them to access claims against third-party liabilities incurred while in the country and other 14 member states of the ECOWAS, excluding Cape Verde, which is an island country. The ECOWAS Brown Card Scheme was introduced in 1982 following the signing of the ECOWAS Brown Card Protocol by the ECOWAS heads of state, with a primary objective to facilitate the free movement of people, goods and services across the sub-region. And Egypt is set to receive a €150 million grant in early 2023 to help it overcome the current global food crisis. And the head of policy and impact unit at the European Investment Bank Global Strategy and Partnerships Department made this known. The program is meant to accelerate the national climate agenda by mobilizing climate finance and private investment to support Egypt's green transition. The EIB will also give Egypt $10 billion between 2023 and 2030, which is expected to be allocated for the energy sector, and is seeking to finalize its €78 million agreement with the Egyptian government to help it implement 2 wastewater treatment projects in Haman and Fayum. And that's it on Business Incorporated. Thank you so much for watching. I'll catch you again tomorrow. Bye for now.